Okay. So Sunday class, we're gonna do a charting session too. um, holy cow, we're just bullish, right? If we don't smack all time highs this week, I'm not gonna know what to think. So, yeah. Let's take a look at the 4 hour real quick. That's not the 4 hour. So, uh, ES is lagging a little bit behind, right? NQ is way up here. ES is down here, but I don't think it's gonna matter, to be honest. Let me delete this SMT. I really don't think that this is gonna matter. Technically, we have an SMT with this high right now. Um, but yeah, I don't see it mattering too much. The good thing is we have really good targets below still, right? Let's go to the 1 hour. Okay, man, dude, this is this is so bullish. It's insane. Like holy. If anybody these days are asking what the bias is, I don't know what, like, how do you respond to that? Like, we are literally just giant stair stepping. Boom, boom, boom. Like, holy. This is 99% bullish. Yeah, dude. 99.9. Um, sorry if I'm a little slow. I kind of just woke up, so. um, yeah, you know what? I feel like I barely even want to waste a bunch of time marking everything up because we're just gonna blast through all time highs and then not know what to do. Like, I'm just gonna have to redo everything again. We've just been inversing everything, right? Inverse is 4 hour. Um, last week we had this low down here marked at 23.35. Do you ever use midnight open and 8:30 a.m. for bias? So Amy got me started using midnight open just recently. But we smacked this low. What was it? Yeah, here. Like, and just got the most bullish reaction ever and just never came back. Like, literally, we just V shaped straight out of here. I think the daily range 50% is underrated. So you what? Go to the daily and just mark the candle? Or oh wait, you saying like this? Start from 6 p.m. open all the way until current PA. Oh, I see. Oh, yeah, gotcha. Yeah, see, I barely use, like, I don't use that many things, to be honest, you guys. It's like I probably should use more. But for me, like this early on, I genuinely am just focusing on what doesn't overcomplicate things for me. Like what doesn't give me too much to think about. And so like I literally just trade IFGs. Just curious how many years. Oh, and I just like don't chart those. Like I use premium and discount, and like that's it. Like I never draw opening ranges or like. I mean, I like using session liquidity, obviously, but just curious how many years you've been into trading. April, May, June, July, August. So on the 11th, so tomorrow will be my 14 months into my trading journey. And 14 months. Wait. 16 months? April, May, June, July, August. April, May, June, July, August. 16? Oh, yeah, 16. So 16 months into trading journey and 16 months into sobriety. Let's freaking go. Starting tomorrow. Let's freaking go, guys. 5 years into this? No. Not yet, but I will be. And it's going to be savage when I am. Just kidding. So somebody wrote in the chat the other day to go over protected highs and lows and how to use them. So we're going to do that real quick. Basically, and let me just draw it out. Dude, I need to, okay, you know what, chat? We're just going to remove all these drawings because I need a clean chart for a bit. So, I could try and find an example real fast, but I don't think I'm going to. I'd rather just explain it. Okay, here's a good one. Okay, here's a really good one. All right, so a protected high is basically a swing high that takes out another swing high that is inside of a fair value gap. Okay, so you see this high here, right? So this high, because it's so obvious and because it's inside this fair value gap here, right? This high, when we take out this high, it is likely to become a protected high. And what does that mean? A protected high means once we sweep this high, you do not want to look for any more longs to take out these highs until we sweep sell side. Okay? And it can't be just like once we sweep this low, this is probably enough. But once we put in a protected high, you have to sweep some sort of sell side before you want to look for longs again. So let me just draw this out one more time. And honestly, there's multiple ways you can use this. You can use this as a way to know, okay, don't go long again until we sweep sell side. Or what I've been doing is if we take an external high, put in a protected high, like this is on the 15-minute chart, so this is a really good one, right? Once we take out the high, it gives me more confluence if I'm wanting to look for a short, if that makes sense. So like, let's say we do have good targets below. We have delivery, right? We have the sweep. Let's say we have an SMT too. Just because we're bullish doesn't mean we'll never get a retrace. So once we put in this protected high, if we do get a setup out of here, like this, like we did, okay, it wasn't that clean. I didn't like look this up beforehand, so I'm just trying to wing it. But like, see how we take this buy side. Okay, this is not a good setup, but let's say that this was like a V shape down, right? Gives me more confluence to take a short because I know we just put in a protected high. Does that make sense? And obviously it's the same way for a low. So if it's, let's say we have a bullish fair value gap, right? And then we have this swing low. We come up, come down. When we sweep this low, now we have a protected low, right? So now that means we have to come sweep some sort of buy side before we come back to target this new low. And actually, There's a good example of that recently when we swept 345. So you see this? So once we swept 345, we put in this protected low because it's inside of this fair value gap. Right? And now you can use that as a confluence to look long. Because you know, oh my gosh, this LR. Okay, my bad. But does that make sense, you guys? Like once we sweep this low, you don't want to target. And then basically, okay, here's another thing. Let's say, so it has to be a high that swept another high inside of an FVG. And then that high now is the protected high. Meaning you don't want to target this high from along unless we sweep sell side. If it's not inside an FVG, it's not as significant. It needs to be like a super obvious one. So like, see this FVG? We got, hang on. See how we got this super obvious swing low right here? Right? And it's inside this 30-minute. Okay. See how we sweep this and immediately just turn around? This is a protected low now, meaning even if you wanted to lean bearish, right? What it means is once we put in this protected low, you don't want to take, like, here, I'll go back a little. Let's say right here, right? Let's say right here when we came up to this, if we V-shape down and close below, you would not want to take a short trying to target these again because we didn't sweep any buy side. Does that make sense? Now, if we came up here and did something like this, and swept some highs and then got a short down, now that would make more sense. But notice how we just kind of push up and hit this trend line and then stall. So if we were to do that and come back down and inverse this, you still wouldn't want to take this because this is a protected low and we didn't sweep any buy side first. Yeah, they'll be super obvious. And they'll happen on any time frame. So excuse me. But yeah, and then let me give an example on the bullish side. Oops. Okay, this for example. See how we have all this sell side down here? We sweep this buy side way to the left, right? Now let's say, let me delete these. So we sweep the highs to the left, right? Now, sweeping this high way over here was a really, really obvious target, right? So in order to want to look for a long again, I need to see an obvious, sell side target swept first. So let's say, for example, we got this right here. Like, let's say this candle inverse through here. You would think that this would be A plus, right? But it's not because you're targeting a protected high without sweeping any good sell side first. Like we didn't even this would be better. Like if we had swept this, you could probably take this. But we didn't sweep anything obvious. you know. So it's a little confusing, but it's just something to like. Honestly, it's not something I really use to incorporate into trades. It's more something that I just like forward test when they happen. I'm like, okay, I think this is a protected high, so we should get a retrace. And I'll just use that as like confluence for market direction. But I'm not like, oh, protected high, now's when I enter in short. Like, I don't use it like that or anything. Does that make sense? That's kind of confusing. I got more stuff too. So don't go anywhere. So it's good to look out for, but you shouldn't like be looking for them every second. Yeah, exactly. It's not like you're not gonna like stare at the 1 minute and be like, oh man, we swept this low, so this low's protected. Like it's not that deep. I like using it on external highs and lows, not like within ranges. So like when we sweep these, now I'm looking like, okay, maybe we have a protected low. As much as well, the thing is the market. I mean, what have we heard 1,000 times? Like the market moves to hunt liquidity, right? So even though we're bullish, if we take out, let me go back. If we just run up like this, all crazy overextended, right, and take out all of this buy side, at some point the market needs more liquidity to be able to continue higher. So that's why that's the market just ping pongs back and forth chasing liquidity, right? Like the market moves by people getting stopped out. So once we take buy side, yeah, we're bullish, but now we have to take sell side to keep going up for buy side. You can't just shoot straight up or straight down. So yeah, that's basically how I use those. Like, okay, well, it looks like this low could be protected. I think, now we may be in a buy model towards buy side. Now I could look for a long. It's just kind of like that, but all right. And then I was gonna explain something real quick, just so that you guys aren't when I mention it, because I'll probably talk about it while I'm streaming. But I wanted to explain it so that you guys kind of knew what I was talking about. But I'm kind of forward testing a model of my own called Fade 15, and basically it's when you're watching the 30-second chart, the 1 minute chart, or like the maybe even the 2 minute, but probably usually I've only done it with 30-second and 1 minute. But you use the equal highs and lows indicator, right? And as soon as you see this, like you get your equal lows put in, this is basically like a buy signal. So listen, I know it sounds weird, but just trust. When you get these perfect equal lows put in, you would basically enter on the candle close long, right? So against the equal lows for 15 points, and your stop would literally be just below the equal lows. All right. On back testing this, dude, I honestly, I'm probably not going to take the time to back test it. I'm going to just test it out as it's happening. So And then basically it's like the same on the top, right? Like if we put in perfect equal highs, uh, dude, I'm honestly not much of a back tester in general. Like I was gonna back test. I've been doing this one just randomly. Just IFEGs. I was gonna back test, but I'm like, I don't know, dude. I have to really be in the mood for it. Um, but yeah, so then the same would work on the other side. Like as soon as we put in perfect equal highs. Oh, gotcha. No, forward testing, not back testing. Forward testing, meaning I'm trying it out in live time. Yeah. So if we put in perfect equal highs like this, right? As soon as we do that, you would basically enter short for 15 points with a stop barely above the highs. So it's literally like your maximum stop loss will only really ever be like 5 or 6 points. So your RR is always going to be like 3 to 4. I started out doing it with 20 points, but I think it'll be more efficient with 15 for some reason. So I like it because you don't have to know any bias. You don't have to have like a liquidity sweep or delivery or any targets or anything like that. You literally just watch for this indicator to mark perfect equal lows or perfect equal highs, and then you just fade it. That's it. Like literally that's it. You don't have to do anything else. It's so mechanical. Doesn't matter like what time it is. Doesn't matter like, and on the 32nd, they'll happen more than you think. Like I was trying it at the end of the day on Friday on the 32nd chart, and I think I took like 7 trades. And it was like it won more than it lost, but your stop loss is so small that it's like, dude, you could have a terrible win rate and you have a terrible win rate and still like it'd be profitable. And the stop loss is so small that you can allow yourself to try it more times per day. That's what I like. As long as you don't go further. Um well, you could do it with micros and like scale at 15 and then hold a runner. You could try that. But think about it, right, guys? Yeah, 15 points is my initial forward testing take profit. Think about it, guys. What is one of the things that is included in the top list for liquidity pools? Perfect equal highs and lows, right? Well, in order for that to be a liquidity pool, that means we had to have put them in and then left them there. Otherwise, they wouldn't be there, right? So my thoughts is, well, if we put in equal highs, that means we must be ready to go down first. If we put in equal lows, well, that must mean we're ready to go up for a minute first. So it's like, if you can catch 15 points off of that, then why not? Okay, I can do that. It's kind of interesting, right? Yeah, it's interesting though. I'm gonna try it for a little bit and just see. I think I made a paper account. Yeah, yeah. See, look. So look, this is the equal lows and highs test account, and it's up $500. That's from one day. That was Friday. Wait, that's not right. Oh, and chat, how much you risking? I'm just literally doing one mini, and then it's like, I don't think this data is accurate though, because this, I feel like I took something. Oh wait, 3 minis apparently. Okay, I'm doing 3 minis, I guess. I like tape read 3 of them. I tape read 3 or 4 of them, and then I was like, oh, I should start a demo account for it. But by then the day was over. But yeah, for some reason, I don't know why. I just feel like that makes sense to me. And then your stop loss is literally only ever like 3 or 4 or 5 points. Yeah, for sure. Like, I feel like they'll work really good when it's like we put in equal highs or lows that are like further to the left. I feel like it'll work way good. Like if we like put one in that matches this or something, boom. I feel like ones that are like far away, like that'll work really good. But I was literally doing it on the 30-second chart and just doing like little scalps. Even when it was like within this range. And it was just working. Like I was like, dude, what the heck? I mean, here's one right here that worked, right? This one, you could have left runners for the rest of the day even, and your stop loss is only 7 points. Oh, and I did open up a paper trade so that we can test out when the market opens, but I might not like be here, so that might not work today. If you guys don't know, we're market makers here, and we can predict the opening price every day by the tick. We got video proof. We've done it twice. Where's the data high again? Like 816 or something? I literally deleted every drawing on my chart for some reason. Okay, let's move on. So that's the Fade 15 model. So if you hear me saying, "Oh, I'm gonna try the Fade 15," or "I'm gonna forward test the Fade 15," that's what I'm talking about. Fade 15 is such a fire name. Sorry. Oxano rejection. And then real quick, I wanted to talk about the for real. I wanted to talk about the schedule for the week real quick and have you guys. So class today, PM stream tomorrow, and then Tuesday I'm gonna do a CPI stream. So I'll be up for CPI streaming, and then we have a FOMO deep dive as well. And I had a request. If you guys didn't see it already, but to be prepared for the FOMO deep dive, if you guys could bring an example or 2 or 3 trades that you took because of FOMO so that we can just talk about. There's no shame at all. We'll just use it as a discussion. That would be cool. I have a couple that I'm going to talk about, so don't be scared. This is a safe space. We can say that we're idiots and get love back for it around here. So all right. So that's the weekly schedule. What else are we going to talk about? Oh, do you guys ever have struggles identifying high resistant versus low resistant conditions? Or are you guys pretty good on that? Cause like I have a few like mechanical ways of looking at it, and then I have a couple ways that I just kind of like my own ways. Yeah, basically bad PA. So I mean, you hear the mechanical things, right? Like um, candles overlapping constantly, like no FVGs being put in, right? So those are some examples. But for me, something I've been noticing is like, do you guys ever, when you're watching the market, do you ever like see candles moving and you're like, oh man, these highs are about to get ran? Or you're like, oh, these lows are about to get ran? Like, does that ever happen to you? Like, sometimes you're just like, oh man, this low is about to get wrecked, or like this high is about to get wrecked. Well, on days when you feel like that, if those highs and lows are not getting wrecked, it's high resistant. And I know that might sound weird, but like when you put in enough screen time and you seen liquidity get ran enough and you're like, oh, this is about to get dumped or this is about to get pumped through, and it doesn't happen, and it just like struggles to reach the high or struggles to reach the low, and then we keep overlapping, those are high resistant conditions. When market just cleanly runs liquidity fast and we have fair value gaps, those are the best conditions to trade in, if that makes sense. And then I wanted to use I have one more thing I wanted to talk about, but I want to make sure Vert's cool it. That includes when we are about to reach the TP but suddenly stop and turn around. So you're saying like if you're in a trade trying to target the lows and it's like zipping and then just freezes here and just starts doing this. Yeah, exactly. That's not always the best. Like when we start ripping towards liquidity, you just want to see it rip. You don't want to see it stall. Because that's when you start getting things like this. Okay, wait. Here's a really good example. So look how right here we sweep these highs. Well, not really, I guess. But we like hit like a resistance area, right? And then look at how much we dump through this. Okay. And then we even close below the last gap in the leg, right? This entire move is screaming that we're going to come for this low, isn't it? I would think so. Like, why wouldn't we sweep this? Look at this momentum, right? We even closed below this last gap. But look what happens. So, I mean, this could be a bias thing, but I mean, this. Dang, looking at this, I don't know if that's the best example, actually. Oh, no, wait. It was this. I'm sorry. I was looking at the wrong one. It was this, okay? See how we have this whole down move? We like really, really just, and then we just come up here and chop. That is not good. Like we should wreck that low, right? And you also see what else is surrounding that choppy PA, right? So it's not like we have a clean run down to sweep this low. We're like slow grind, chop, 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 and then we just have this manipulation down and then back up. So this is the stuff you don't want to trade this. I mean, this setup, this long was kind of, wait. Okay, wait. This long, I think I took this actually. No, wait. No, wait. Last Friday, Amy and I were literally trying to short to hit this low and got stopped out, I think. And then I freaking got in this long and held it all the way to here because I was mad. But anyway, so yeah, those are when conditions are pretty high resistant. And then I was gonna ask Vert if he cared if I used his trade for this example, but he left, so I'm gonna use it anyway. So I don't know why I'm going over this, but I just randomly thought about this. I think I thought about it because I looked at the trade, but one of the biggest struggles I see everyone always having is when to go break even. You guys agree? Like, I know that's been one of my biggest things is like, when the heck do I go break even? Because it's like get stopped at break even and it keeps working so much, dude. Like, I cannot stand that. Oh, here he is. Okay. And I'm not saying I'm gonna like provide the answer to your break even questions right now, but I feel like I have a pretty good example. And it ties into with the protected high thing. But let's say, right, like let's say we have a move down. We put in this high here, right? So we have a good quote unquote break even target or scale target. Then I stopped going at the internal all the time if my discretion is exactly. Okay, exactly. So now let's say we have this high. We come down, get an inverse setup, right? So what would be the mechanical thing to do? The mechanical thing to do would be, right? I'm sure all of us would be thinking we go break even here, right? Because we sweep this high, right? Now, why do we normally want to go break even there? Well, what did we talk about with the protected highs? So you see how this is a gap and this is a high, right? So if we sweep this high, we go break even because this is potentially now what? A protected high. So we don't know if this is going to reject, deliver from here, and come back for sell side, or if it's going to continue, right? So just take a mental image of this, right? Now, here's, I want to show Vert's trade example. Okay. So, and he said sad break even, right? Now, let me say this. Do you see an obvious difference between what is further to the left of this internal high versus what we drew here? Do you guys see the difference between the two? So Vert, for your trade example, for your trade example, the reason I'm using it is because this is a really like subjective decision, because for me personally, when I look to the left, all I'm seeing is more LRLR that wants to be ran. So for me, I'm not going to go break even here. And why? That's just because I look further to the left and I see just more internal highs that are asking to get blasted through, versus when we have something like this, you just have a BISI or a SIBI to the left. rather than we come down, go like this. Right? So you see the difference between the two. And so if you have obvious liquidity, you might adjust the break even a little bit. That's the way I'm thinking. In live time, it was a huge momentum candle. I was like pretty sure not in a macro. So I also go break even sometimes off trend line rejections. Yeah, that's fair. 100%. And that's just, that's just a per trader thing. The only, like I said, I'm not saying that this is anybody's answer, but I just like randomly thought about this when I looked at his trade earlier. And so I was like, oh, I'm going to share that during class because that was my thoughts on it. So it's like when you have a gap here, we come up and do this. If you're in this trade from down here, you do not want this to come back here because of this gap. If you get in this trade, right, and we come here, in my opinion, it's okay if it comes back a little bit because we still have liquidity left to run. That's the way I'm thinking. But I also see like the rejection thing. But as far as liquidity goes, if we sweep sell side and we have this LRLR, it's almost like you got to have faith the liquidity will get run eventually, just not at the exact moment. Yeah. It's, and maybe this is just like something I'm dealing with, but I just feel like if the liquidity is obvious, going break even is not always going to be the best. Well, and people that trade IFEGs, honestly, like we all got taught by the same person, and the way he teaches the BE is like that. But the thing is, and I will say this, because that's like such a controversial thing, is like the way that Dodgy does his break evens or not. And the thing about it is Dodgy developed the model to work the best for the way he is as a person. Dodgy freaking hates losing. He hates taking losses. So he would rather go break even fast and get break even than be done than risk taking a loss and getting mad. That's the way I see it. And so, if you have a higher tolerance and you're not worried about taking a loss and it's worth it, then just hold the. You just give yourself a chance to work. Like if we're volatile, we can easily spike up 20 points and come back to entry and then keep going. Like that's just how it is. And so sometimes you get wicked out for no reason. So if you trust your draw, one thing I've been doing is when I feel like I want to go break even, I just move my stop loss up to 5 points instead. So then I'm just risking 5 points, but I'm not like it's different with size. Most people who trade DD strategy are scaling 1 to 3 micros. So if you're going BE and scaling 1, you're making no progress. If you're doing 1 to 3 minis, that's a different story. Yeah, true. But yeah. So break even's a very subjective thing, It's going to be different for everybody, but I just wanted to share that example in case that was helpful. Yeah, exactly. Like, well, it's about finding your risk tolerance and it's about finding like okay, I know it's going to sound weird, but you got to find ways that you got to find ways to trade and like you got to trade in ways that make you feel good. If that makes sense. So like for me, I'm okay. I'm honestly okay with taking a 15-point loss over getting break evened. That's my thing. Like minus 150 on the day is way less annoying to me than plus $6 for some reason. I mean, but now I'm like, okay, well, if I go break even, I might just give myself another trade. So that's different. But yeah, exactly. That's how I feel, Hutch. Like it never freaking saves me. It's always like I get ticked out and then it just keeps going. It never saves me. Now, like for a newer IFVG trader that's just trying to learn it, it makes sense to go break even faster. But a loss might give you a reason to figure out if you did something wrong. Yeah, right. Like I take a loss, now I can reevaluate and say, okay, what went wrong about that trade? What was not good about that trade? But I get break even and it just keeps going to my TP. Now I'm just going, great, I was right. And now I'm sitting here on the sidelines. And that's frustrating. I hate that. I like seriously would be like walking around shaking my head. NQ, friggin' hoe bag. That's mine and Amy's favorite thing to say. NQ, you hoe bag. Everyone's different. I'm more like Oksana. I'd rather take a little loss and trusting my RR and direction than taking 3 break even. Yeah, exactly. That's what I'm saying. It's good to learn a model, but you got to learn the tweaks to make it work for your own psychology and what works best for you. Yeah, exact. Dude, I'm telling you, since I've been using the 15-point hard stop, man, like other than unlucky break evens, my average RR is way higher than it used to be. So it's like as soon as I stop getting these unlucky break evens, it's going to be nice. Average RR after I tweaked it has been like 1 to 2.5. Fire. Could you give some examples on the chart how you would put your stop loss? Yeah, it's literally just um it's literally just 15 points hard stop. So no matter where the entry is, 15 points. And then sometimes when the play starts working, I'll drag it up. So like I went and looked at my average win to average loss. No, just I'm usually just full TP. But I went my average win loss since starting the 15 points hard stop. And literally I think my R the last 2 weeks is like 4.4. Like my average loss is only like $100. Like that's so nice, dude. Micros are the wave, even though I hate them. My Discord froze. Come on. Bro. My bad. My Discord froze. I would leave runners, but I only usually get in like 5 micros. So I just kind of hold TP. And like, man, I think that I'm like, if there's a super obvious draw on liquidity, I swear I'm about to just start trying to leave it till we hit it. And if that's not super obvious, then I just take my 20, 30 points. But dude, I genuinely want to practice like just letting it go and letting it work. 5 micros. Hutch. Exactly. And okay, so let me expand on what Vert just said. He said, I've back tested my wins. The best are the ones that go fast. So now that right there is what gives me more confidence to do a 15-point hard stop. Because if I get into a good trade that's going to work, it is not going to go against 15 points. And so that's why I'm comfortable doing that. Like if it's the setup that I'm taking and I think it's the setup that I should be taking, it's rarely going to go 15 points against and then work. It'll usually work first. So and even then, like I just know that 15 points is my tolerance and I'm fine with that. I don't want to lose any more than that per day. I just feel like if I let my trades work, it's just easy. Like one win can make up for 2 or 3 losses. Oh, my sizing for prop firms is 5 micros copy trade. Unless it's an eval, then my sizing is max leverage. Probably going to wrap up here in just a minute. Some people go for a certain number, which I don't know how I feel about that. What's your take? Or like a certain RR. I genuinely do not look at RR in a trade. I just set my limits, and usually I try and go for a target. You don't use like dollar risk amount. You do contract with points. Like I just use the limit order. So what I do is my minimum sizing will always be 5 micros. My maximum sizing will always be 1 mini or less. So by using the 15-point hard stop, no matter how many contracts I decide to use, I know my risk will always be between 150 and 300. Always. And then like I've said, I've been using like the slide up method. So if it starts working, I've been sliding my stop loss up. And so sometimes I'll take like a 12-point stop or a 10-point stop. Because if it starts working, I'll slide it up a little bit, thinking that it shouldn't come back. The stop loss issue is what complicates my psychology the most. I was thinking to consider the VIX before taking. No, I do a hard stop, Hutch. I mean, when we take a trade, it's supposed to be a winner, right? So the DD manual stop approach makes sense not to be wicked, but it's crazy. Might make the trade with no hard stop, but short hard stop, it makes me feel like What am I taking the trade for then? So maybe if the volatility is high, then I'll go manual stop with stop loss far away and size down. But if VIX is low, I'll go short hard stop like you reliable. Yeah, and that's another thing too is if we are really volatile that day, then I will size down and do a 20-point hard stop. So there is that. But lately I haven't had to worry about that. It's just one of those things. Close below gets stopped out way too much. Well, here's what I always hated about the close above or close below. It's because if we get let's say that this gap is 20 points, right? And then let's say that our inverse up here puts us at 22 points, okay? If we do the close back above or below, dude, you don't know if it's going to close back below here or close below here or close below here or close below here. And that's the part that I always hated because it's just made my risk all over the place. Like, I don't want to have to adjust my micros every single time for that. I want to just be able to be like, dude, this is my risk and this is all I'm going to do. Like, I don't want to go, okay, we have a 20-point inverse. My stop loss is going to be 20 points, but it could go 25 before it closes. So I got to adjust the micros and blah, blah, blah. Like, I cannot do that, dude. It's just too much. It's seriously just like, bro, I just want to hop in, put my stop loss and just run it up. I want to know what I'm risking every time, not be like, okay, the close below could be 30 points. The close below could be 27 points. The close below could be 40 points. Close below could be like, I feel like I have to trade 2 micros every time because I don't know how bad the close will be if it fails. I'd rather just do a hard stop and just get myself out. But that's just me, you know? Everyone's different. Man, ICT stop losses are always like 10 points, man. The guy's precision is crazy. I might have to tap into a hard stop, even if it's in the gap, because I'll have days where I accidentally risk too much. Yeah, exactly. And that's what I always hated. Like, I would have months where I would be green most of the days, but I'd be break even on the month because the winners or the losers were always way bigger because it's just too inconsistent. Like, the stop losses are too inconsistent unless you're calculating it perfectly every time. Like, I don't know. I need consistency for my losers. The winners, I don't care how much the winners are, but I want my losers to be locked in. Like, any winning trade is a good winning trade, but I want a losing trade to be a good losing trade too, if that makes sense. Like, I want to just be able to take the loss and be like, okay, that did not hurt me at all, and I'll see you tomorrow. You know? Like, dude, risking $150 with 15 points, I would have to take like 20 losses in a row. And I just don't I just don't see that happening. And that gives me more confidence to trade more. Like, it gives me more comfort when I'm thinking about getting into a trade because I feel no pressure because I'm like, dude, if it loses, I'm down $150. Who cares? So it's like, it helps with the hesitation issue too because I know how much my risk is on a daily basis. Each trade. But yeah, I think I'm gonna wrap it up so we can get ready to go to the lake. If anybody has anything else they want to talk about, Ryan, I don't know if you were here at the beginning, but I did go over protected highs and lows, so it'll be in the video when I post it. Hard stop might be the wave. Dude, I'm telling you, it's been like genuinely, it's been really nice. It just keeps your average RR and risk management in check. Like, I don't know. And the way I discovered this is from just taking screenshots of all my friggin' trades all the time and then posting them, because then I can go back and look at every single one and say, okay, well, if it was a winning play, did it ever go against me 15 points? Yes or no? No. So like even this one from Friday, I think, see how I enter here and my stop loss is just right here. Here, stop loss is here. Wait, this one was too big actually. But it's just like any winning play that actually wins, they just don't seem to go against me 15 points. So, not going to lie, I tried the 15-point stop and it's good. Hey, let's go. Yeah, exactly. And then, yeah, okay, so there's another good point, Ernacho. When you have a 15-point stop loss, it's really, really easy to snag up 1R or more, right? So now 15-point stop loss. Let's say I take 2 losses during the week. I'm down 30 points, but then I take 45, 50-point winner. Then I just make up for all of that in one trade. And it's still like you don't have to risk a lot in the meantime. I was doing 20 so I can size more. Yeah, you can do that too. But yeah. Yeah, the runners make up exactly. See, like that's been the last 2 weeks since using the 15-point hard stop, because I also adjust it and I drag it up. So it's like, I don't know. If you can keep your risk on lock on a consistent basis, it's way easier to come out profitable over time, I think, because I don't know. Keep the losses small. But yeah. All right, you guys. I'm going to go get ready for the lake. Thank you for joining. I really appreciate it. And I'll see y'all for PM tomorrow. And then CPI stream Tuesday morning. And if you guys are still wanting to do learn stuff, go hop in Vert's class, because Vert's doing a class too right now. All right. Later, y'all.